Mic check, mic check, mic check. So I'm gonna get started here in about a minute, y'all. I'm just trying to get everything, make sure everything is streaming. You can hear my voice. If you're in the chat, guys, drop a comment. Let me know that you can hear my voice. We're gonna get started with the market review here in a second. All right, everybody, cool. Let's get started. All right, so hopefully you guys can hear me. I don't see any action in the chat room just yet, but let's get into it. All right, so this week was an okay week. I had some losers and I had some winners. Go figure, right? Oh, before I get started, y'all, just at the beginning, if you're live or if you're watching the recording, check out my link tree that's in the description. I'm creating a free Discord server for trading, to hang out with folks and to share some ideas. And yeah, so check it out. Link is in the chat. Free Discord server. Join it. Let's link up. Help this introvert out, y'all. All right, so next up, let's see what we got. So let me minimize this. Oh, hold on. Let me put something on real quick. There we go. Y'all can remember, drop the questions in the chat at the bottom. All right. So this purple line shows you Sunday, which is the beginning of the trading week, right? And so this is the whole week's worth of movement. So I only traded a couple of pairs this week: GU, GA, Euro USD, and gold versus the US dollar. Those are the couple of things that I got entries on this week. I did a little bit of NIC 100 trading, but that was just more experimental, so I'm not gonna really go over that one. All right, so GU, we got a short opportunity right here. So let's go look at that first of all. So on GU, this was just a little quick scalp. If I remember correctly, yep, it's that New York session. All right, so we go down to the 15-minute. We had a little situation where we got price hitting a peak. You know, you guys, if you go back and look at some other videos, I like to trade at quote unquote support and resistance levels. At this particular instance, we had the situation where price, see how price, let me zoom in, I keep forgetting you guys, maybe on smaller screens. See how price back here at this level, how it took off really fast. See how it was kind of choppy, went sideways, it spiked up here, inducing buyers to buy, and then it slammed down. Alrighty, so those are areas that I like to focus on. And so as you can see in the future, when price returns to that level, it's been a while, all right, it's okay. Look how price literally stopped at that level and started to reverse. So based off of that and a couple of candle stick patterns right here, right guys, if anybody can tell me what this is, drop it in the chat for me right here. Anybody know what that is? These two candles, this one and that one. Now mine are not the basic colors, but this would be a green candle. This would be a red candle, right? That's an engulfing candlestick pattern, right? Whenever you have the situation where the second candle completely engulfs the prior candle, or the opening and close, or past the open and the close of the prior candle, that's considered an engulfing candle. Now that does not always mean that the price is going to go the way that the candle engulfed. So if you look right here, this was a smaller candle, larger candle, engulfed the prior candle completely. Did price go down there? No. So needs to say you can't just trade engulfing candles, but you know, we're gonna get off of that. So long story short, this was confluence because we had that zone that I talked about earlier where the price pushed down real hard from, and we got the engulfing counter pattern stick, and then when I checked it out, price was retesting. And so take a little simple trade, entry right here, price above that high, it should hold, but if it doesn't, you want to put your stop loss at a level to where if price gets there, it invalidates your reasoning for entering that trade in the first place, right? So for me, I don't necessarily like to put my stop losses just right here, because sometimes the market will wick up there and touch that level because it knows that you're going to put your stop loss right there because you're trying to squeeze out as much risk reward as you can on that trade. Me, I'm just trying to be consistently profitable over time, right? So as you can see, I had a 20 pip stop loss on this particular setup. Target was 2 times that particular risk. So, and I was looking at this area right here again. You had this situation where price was running up, it paused, and then it shot up. Look at that counter. That counter was redonkulous, right? During the looks like the London session at 5 o'clock Central Time, right? So when price got back down there, I wanted to get out of my short opportunity because, you know, to be honest, look at the market. Well, it was going down, and then this is kind of, yeah. But long story short, you might find some resistance where price might bounce a little bit there. So we're going to go ahead and get out and take our money. So that was one trade with GU. And then here, I was trading the Asian breakout strategy that I utilized. Check it out. Price was consolidating during the Asian session. If you look at this time frame, and that's generally what price does. Well, slammed down, make you think that price was going to go short, and it hit a floor, and it gave you again a candlestick pattern, right? What's that right there, guys? Engulfing counter, right? Anyway, once that counter closed, I'm getting into the trade. Stop loss just under that particular one. With this particular strategy, I got my stop loss a little closer because these 2 wicks that reach down to this level, all right, that's showing me that the price doesn't want to go lower. So I'm okay with putting my stop loss a little bit closer there. And even if I didn't, let's say I went a little bit further like this, it's about 24, 25 pips. It's still a nice risk reward. In that case, it'd be 1 to 2.28. But in this example, I got almost a 3 times RR, which is great. So again, got in there, price pulled back just a little bit, and then it took off. Remember, we're on the 15-minute chart. And this was during the London session, right? If you look at the time, it was at 4:15 a.m. So nice little push up there for a trade. Got out. Wish I would have stayed in because look at the price movement, man. That price continued to run. That could have been a 1 to 6.5 RR trade based off of that run. But we okay with that. We're not going to cry over spilled milk because guess what? We made up 3R. So we risked 1, we made 3 units, right? So that can vary from your account size and your risk management plan. But look at price. Came up, hit this ceiling, and started to play around. I didn't get in for a sale here on GU because I had already got that buy opportunity over here. But let's go to Euro USD. Now, I did get it. And if you don't know it, Euro USD and GBP USD are correlated pairs for the most part. As you can see right here, we had a move on EU around the same time for that buy that I got in for GU. Now, I didn't get in both. But yeah, I did get into the EU on this particular short opportunity. Again, very similar. Looking at the time, this was the Asian session right here, guys. You can't see it at the bottom, I don't think, but this is between 5 o'clock Central Time till about 1 a.m., which is when the London session starts. Right, so see how price again consolidated, reached up to the top to induce people to buy. Price started to hit his head on this ceiling, right? That's a telltale sign. You got 1, 2, 3, 4 taps to that high. For me, that's almost golden, right? This is during the London session. London session is really having trouble breaking that level. So guess what? Once I got this bearish engulfing counter print right here, I'm taking a shot at it. Stop above that. Now in this example, I gave a little bit more room. I gave it a 30 pip stop because we're getting ready to go into the New York session, and sometimes New York session will pull some BS and it may throw a crazy wick up here like that and then slam down. And I didn't want to get stopped out by having my stop real tight. So I'm going for a longer trade because in this example, we're getting into Friday And Fridays, a lot of time, if you pay attention to the market, it'll pull back a lot of the movement that it had during the week, which was bullish for most of the week, right? So my idea was I'm risking 30 pips, but yeah, I'm looking to get at least 50 to 60 of that on the downside when I short it. So as you guys can see, it played around, came down, came back to my entry, played around with my mind. This is why you don't want to move your stop loss to break even too soon, because it came back to my entry, hit my stop loss, or would have hit my stop profit, and then drop. But again, we holding the line, right? We have already accepted our risk, which is the 30 pips, depending on your lot size and what percentage of your account you risk per trade, right? Go back and watch my risk management video if you have not seen that on the channel, on the YouTube channel. Or if you join the free Discord that I talked about at the beginning, you can go into the Discord channel where I have the free trading videos, and I have it linked there as well as some of the videos you want to watch. But powerful video about managing your capital and how you can remove yourself from the norm, right? Normal traders blow multiple accounts and are YOLOing and gambling in this market. But we want to treat it like a business, and we want to have a plan, and we want to maintain the most important thing, which is capital management, man. If you don't have capital to manage, you don't have a trade. You don't have a trading account. So that's Euro USD, that's GU. Now let's look at GA. GA was a nice one, man. So GA, I was catching that one off of a swing trade opportunity. Again, kind of similar to how I just spoke about how EU was running up for a good part of the week. And we got into the Wednesday, Thursday area. We started to hit some ceilings, and you see price was having trouble making higher highs and higher lows. If you understand market structure, the market tends to make low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high. First sign that price could be starting to turn around, right? We have a lower high being created. Low, lower high. Now we got a lower low. If you go back and watch my video about how to make money in the Forex market, I talk about market structure and how when you have this move where you have price make a low, lower high, and then the confirmation will be the lower low. So the second lower low will be the confirmation that, hey, price is probably going bearish now, or the market trend is reversing. So price pulled back, started to drop a little bit. I got in right here, stopped just above this high, because if in fact the market is respecting structure and going to go low, it should not break this high. It may break this high, but it should not break this high. As you can see, price pulled up a little bit. I'm not worried because I've already accepted my amount of risk based off of my account size and what percentage I want to risk. And price starts to fall off from that point, right? And I got out right here because price started to go sideways. We was getting into Friday London session, and I didn't want market to pull back and take half of that back. So what I did was I went ahead and closed out because I was already up 2 times my risk. So again, going back to capital management in the video I did, that's the most important thing, man. You can never go broke taking profits, right? Yeah, I could have got another 2R on this trade if I let it ran, but also I could have let it ran and it took away 2R, and I'm back to break even trying to, chase the rabbit that's in the bush, right? You ever heard that saying? A bird in the hand beats 2 in the bush, or however it goes. All right, so me taking my money, because guess what? Next week, I'm going to be looking for the same opportunities in the market, aka my edge. I'm going to be taking my trades based off of my risk management plan, and we're going to keep it pumping, right? So that was GA. Gold. Now, gold, I have been waiting for gold on this swing trade opportunity, because as you can see, if I go to my day chart, and I talked about this in my prior video, I have these levels that I had marked up for gold, where you see these blue boxes, right? This is a area for the weekly chart where you had the price shoot up and gap on the weekly chart. And what's crazy is that look how price hit that level and it bounced off of there, right? That's crazy. But anyway, that's not why we're here. We're in here because on the 4-hour, I'm looking at this level right here where price pushed down from, and it made this little wick right here that broke these prior levels. So when price came back to that level, I had alert set. Price hit that level, and then I went on the 15-minute and I waited for price to do something that I like on the 15-minute. All right, so it reached up here. It gave me a wick to the top. All right, and then it gave me this indecision candle. if you look at your candlestick Bible, guys, free online, just Google candlestick Bible. It talks about these candlestick formations and what they could mean. And so in this example, this particular candle shows indecision in the market. For me, a possible reversal. So guess what? Taking my shot, stop above this zone that I have marked up, which is this orange box at the top, which is about a 39 pip stop loss for gold. If you look at this right here, you see 384.3, but the way that Trading View shows this is actually 38 pips, because gold, if you see right here where it says 3.8, it's like UJ. The pip is going to be the first number after here, so that's 38 pips or 38.5 pips or whatever. So about 40 pip stop loss. And if you look at the actual target I originally had, was way down here. I was expecting a big push down from that 4-hour level because it's a 4-hour zone. So I was expecting a big push. Well, price pushed. It started to kind of consolidate, and we ended up getting out of that a little bit earlier. We got about a 1.5 RR on that, somewhere around in here, and we called it a day. Now, I did take L. I talked about taking L right here. Thought I was going to get a short opportunity on gold for a continuation on this down move, and it went the other way and came all the way back up to my entry, and then it fell off. But by that time, it was Friday. I've already closed off on some good trades with Euro USD and GU, as I told you guys. All right. And so I didn't even go back and look at gold, but look how great. If I would have just left that trade open and not closed it, right, and not move my stop to profit, because again, I talked about it being a 4-hour zone. Look how much profit we could have gotten. A 1.7 RO, which is amazing in trading, right? Amazing, especially on gold. A very, very rough pair for some people. And if you've been with me long enough or followed me long enough, you know me and gold have a complicated relationship. All right, so the fact that I'm even trading gold is amazing. But information changes situations, right? So cool beans, y'all. So that's going to be it for the market review. That's all I had this week as far as trade setups and opportunities. Again, not bad for the week, but do me a favor, y'all. Again, I'm doing these calls weekly, doing a review. Drop some comments. Let me know if you have any questions, comments, or concerns. And like I said, guys, check the description of this video. I do have a link for my free Discord channel in the link tree that's linked in the description of the video. All righty. So thank you guys for hopping on. I'm gonna talk to you guys on next week, and I'll see you in the server. If you join the server, let me know you're there. Say hello, introduce yourself, and we'll be in contact. But y'all have a great day. Good luck on your trading next week. And as always, stay positive, disciplined, and consistent.